What's going on, everyone? My name is Nicholas Merton here from Datadash, and today is October 25th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I want to spend some time to have an honest conversation with you guys and reflect on the past few days of price action, as Bitcoin has clearly broken through the line of resistance in the near term we expected, where it would face resistance and face further correction to the downside. We've broken through that line at 31K, come up towards a relative high at 35,000, and cooled down towards around 33,800. $100 at the time of recording. I want to spend some time to not only reflect on that price action, but the broader amount of 2023, and spend some time talking about the things we got right, but mostly the things we got wrong here, as this definitely hasn't been our best year of trading. I'll be the first and foremost to say it here, because I've always been honest here on this channel since we started back in 2017. I believe it is essential for us to reflect on where we get things right, but also most importantly when we get things wrong, and try to spend some time to explain my rationale for where I was coming from, but above all, try to look forward into the next coming months to prepare for what may be lying ahead. We've got a lot to unpack here in today's video, as well as a sponsored review of BitGet with their new copy trading feature later on in the video, so I hope you guys will stay tuned for it. But let's go ahead and kick things off here. I want to start by saying, first and foremost, before anything guys, to clarify two big things here. First off, some people are under the impression that we've had a short position here for the past few months, and I don't blame them for thinking that. We've held a pretty strong conviction on prices going lower, but at the end of the day guys, whether you've been a member of the Dash Report or seen it here on this channel, as we vocally mentioned, if you watch our content frequently, we never actually built any short positions. While we did have conviction that prices were likely to go down, we've been vehemently honest here about our cash position, which we built back in August of 2022 when selling our Bitcoin and altcoins. And while that definitely paid off for the altcoin equation, which was the majority of our portfolio, to be honest, Bitcoin continued to move higher in that period of time. Now, the big thing here I want to go ahead and clarify first and foremost is that whether you're talking here in the near term, if you've bought Bitcoin in the past few months and now you're in the profit, or if you bought here more in the capitulative phase, I'm going to be the first to say here, congratulations guys. That's awesome to see that you stuck with your convictions and you came out on the winning side of the trade there. While I wouldn't say we were on the losing side of the trade, we definitely got it wrong, as we were expecting Bitcoin's price to face much more hesitation this year, as we've considered a lot of the macro outlook. And I'm going to be the first and foremost to say that you got it right, and this year we got it wrong. It hasn't been our best year here on this channel. We've been doing YouTube here since as far back as 2017. I've been trading as far back as 2011, if you can believe it. Over 12 years, traditionally in equities, commodities, and Forex, and then taking a lot of that knowledge into crypto and learning a hell of a lot more in the process. But I really mean that. At the end of the day, guys, this has been one of the more difficult years to trade. It has definitely gone against the grain here, because we have not really had global liquidity working on our side. We have definitely had a lack of fundamental development in crypto. And I think even those who would remain bullish here in this market around the Bitcoin ETF narrative, or whatever may be remaining that really could potentially sustain a long-term bull market, would agree that there's probably some fair arguments as to why things would have moved lower. But let's put that aside here. At the end of the day, the narrative now is a Bitcoin ETF. And for those who did make that trade here, I want to congratulate you on that. That all being realized, I want to focus here on what might have caused this move, albeit at the end of the day, it's not meant to be an excuse. It's just something to realize at the end of the day, guys, and it's going to play into what I want to talk about here as we go throughout the video. If I here have the honest courage to sit here and say that, yeah, we got it wrong over the past few months, then I hope you guys will stick around here and heed my kind of message of warning here to at least consider when you're doing your analysis. I don't want you to take everything I say at face value. We've never vehemently spoken out that you can't dollar cost average, albeit I think that it is something we should be wary of and take it at a slow pace here over the next few months. But let's go ahead and spend some time here to talk a little bit about this. So what really caused this move here, or at least what's the likely catalyst for this? Well, for me, the thing that I can pick up that everyone's been talking about on Twitter or on X is the essential iShares Bitcoin Trust listing on the DTCC, the Depository Trust and Clearing Corporation. Essentially, this is a registration database where you have specified serial IDs for potential ETF products. And once this was recognized to be on the list by mainstream opinions and news outlets, this got a lot of people confirmed of the idea that a Bitcoin ETF was guaranteed. Now, later reports confirmed that this has actually been up since August, but the big thing here that is important to understand is the clarification that came from the DTCC that essentially mentions here that just because an ETF is listed here, and the iShares ETF, for those who may not know, is the BlackRock ETF filing application, essentially that even if it's on the DTCC list, it doesn't guarantee that an ETF is absolutely approved. But I think by this point now, a lot of people, at the end of the day, whether you believe an ETF is coming or not, saw this as a cause for concern that an ETF is coming. It's time to get in and get in before the crowd gets in. And the thing is that I want to mention here, above all, guys, while you may be leaning in the bullish camp, while many of you may be riding high right now with a lot of profitable positions, just be careful here at these levels. I've been on both sides of the trade here over the last 12 years in various markets. I've been riding high at moments, and unfortunately, throughout the process, I didn't learn to keep skeptical of hype. We saw that in 2021 and 2022 as we were expecting further acceleration of price in many ways, albeit we also kept some bulls in check when a lot of people were believing the super cycle was going to lead Bitcoin to 100 to 200K within such a short period of time. But outside of that as well, even in traditional markets as well, this has happened before to me where I've gotten caught up on false rumors and things that fit the narrative that I'm looking for. And I think it's very clear here that this event, as well as the news that came out of Cointelegraph, which turned out to be fake, the various SEC victories for Ripple or Grayscale, didn't turn out to be as optimistic as they'd hoped for. And that has definitely led towards some buy-side pressure. I think what we saw here over the past few days is essentially that the market was led here by this kind of falsified news that came out of Cointelegraph. And once people started to see that there was some demand here, people again continued to pile in and fit into the narrative that it was almost guaranteed as the pressure builds up more and more. I'm not going to sit here and say that the ETF isn't likely to come, guys. We don't know at the end of the day. The SEC has put up a great fight against it. We have been one of the biggest advocates for an ETF as far back as 2017 and 2018 when I personally wrote a letter that got thousands of shares urging the SEC to move forward with an ETF and the various reasons as to why we supported it. But it is a very hard battle to fight when you have an agency who does enforce the regulation around securities, and they could very well continue to use these one-off events as an excuse for potential market manipulation and continuing to delay or even procrastinate the idea of a Bitcoin ETF coming to market. But again, as a lot of people have seen with the DTCC, many people see this as the final chapter, that an ETF is guaranteed. And I think at this point, it's really petty for us to continue arguing whether or not we think there's not going to be ETF or if there is. The question here at the end of the day that I want you guys to keep in mind is that once that ETF does launch, if and when it comes, I want you to consider the question, as we've talked about for the past few months, whether or not there is going to be the demand for it. Now, I understand a lot of people, including myself, going back to 2017, has talked about this idea that a 0.5% or percentage allocation in pension funds towards Bitcoin is just going to send the price sky high. But the thing I want people to consider here is that while we may be entering a macro environment where some of us see it being a great opportunity to invest in Bitcoin as an asymmetric asset, and some, like myself, who lean in a little bit more of a risk-off perspective, I want you all to consider the idea here that going all into Bitcoin may not be the best move here, and whether or not there's really going to be enough demand to essentially accelerate this sky high. Will pension fund managers, who many people are hoping, alongside BlackRock and all these companies, be the demand that we really need to see for Bitcoin? Will it lead towards the ability to actually spark a new bull market, setting in new highs for Bitcoin, and really scaling up market cap to trillions, if not tens of trillions of dollars for Bitcoin? I don't really see that coming here in the next year. And that's where I still stand my ground here. I still don't believe we have the legs to kick off a new bull market. You may agree to disagree, and that's fine. But I'm going to be candid with you guys in saying to be careful here. And along with that, for those who are looking to maybe build positions now that they're feeling more FOMO, I would recommend keeping it moderate, not going all in with your money. It has never paid off for me, guys. I promise you. Even in the last bull market and prior bull markets, the secular bull run of last decade, As much as the number goes up and to the right over the long term in most cases, it is definitely not beneficial to go all in on one singular bet, one singular stock or asset. And I understand Bitcoin is almost in a league of its own when it comes to comparing it to other altcoins, but I would just heed caution in going all in at one particular price range, feeling FOMO and going off of emotions. There is a lot going on in the world right now. IAT here, the regional banks ETF, is coming down to its lowest level since May of 2023 and looks like it's set to come retest levels back here in March of 2020, cutting out years of recovery in price and revisiting back towards the lows of the COVID crisis back in March of 2020. Outside of that as well, we've got a lot of issues in the broader financial sector. We've continued to set on lower highs here and look like what may be a potential line of support is about to be snapped. A wedge that's been building up here that could lead down to the downside. We'll have to see here how things play out over the next few months, but I sense that across the board we're getting a lot of signs that a recession is coming. And Bitcoin has historically done well during periods of time where there is monetary debasement, an acceleration in the money supply, good times in the economy. I know a lot of us like to think that Bitcoin is similar to gold in a way that it's this hedge during things like inflation and wars and uncertainty, but I really think that Bitcoin itself is a kind of money printer hedge. It is something that essentially allows you to hedge when there's excess money, where there's so much money in the system being printed that you just don't know where to park it. And right now we're not in that environment. We're in an environment of monetary contraction. We're, for the first time in our history, seeing such a significant reduction of the M2 money supply. You could look at the United States the Federal Reserve balance sheet. You could look at global liquidity like we track. All those metrics are showing a downtick in liquidity. And that's the counter opposite. It's not keeping the money supply where it is and waiting for time to pass. No, it's reducing the money supply. It's the Fed and other central banks directly trying to address inflation. And as we've talked about in this channel for a long time, we feel we're in a catch-22 with the yield curve uninverting here. It either means that the Fed is going to do things right here and leave us in a short-term recession, or on the other ballpark, we are going to keep the yield curve inverted for some time as the Fed maybe kicks the can down the road and essentially, by not doing enough, lead us into a depression long-term. And that's going to leave people with a lot less disposable income. It's going to leave a lot less people having that excess capital to go out into other speculative investments. And unless you're really going to put all your cards into a US default and the United States collapsing, which I don't take completely out of the equation. The US has a lot of problems going for it now. It's a difficult time for the leader of the free world, right? This is a very difficult time for the US. You do have BRICS, you do have so many things going on. You have geopolitical conflicts, you've got financing of debt, which is getting more expensive. And you got inflation, a lot of other issues. I get it. But that's a very big bet to make. So we have to keep moderate here, guys. And that's why I would say that if anything, 10, 20% exposure to Bitcoin out of the money you have in your savings is probably where I'd say to keep it for most people. Because we don't know what the next year is going to bring. And sometimes having that additional cash on hand, rather than being in a position that could lose 20, 30, 50% overnight, albeit while it might be able to gain as well at the same time, is going to be a much better position than going into that more speculative position where you're risking it all. Everyone has their own risk tolerance here, but I would heed caution here in getting too confident in the crypto market here and continue to watch a variety of other charts like total market cap to see if we're actually going to be able to send signals across the board that we can go long Bitcoin or that we can go long altcoins and various other investments in crypto. That's my main comments here today, guys. And I hope that you can continue to reference towards this video as well as the other videos we will continue to put out Monday, Wednesday, and Friday here on this channel. We are always going to stick here whether we think it's a bull or bear market. And no, it's not because at the end of the day, I'm trying to make a ton of money here. I'm trying to showcase to you all what I believe is going on in the market. That's why we don't push a lot of the leverage trading platforms out there. It's why we also don't push a lot of the kind of rampant need to day trade and speculate. And I think alone sitting here on this channel and us continuing to stand against day trading, leverage trading, a lot of the key elements of the crypto space where people trip up, not to mention always constantly speculating on altcoins, I think showcases that we're here for the right reasons. There are a lot of ways where we could easily sell out and we could go out there and do a lot of terrible things here in this channel, but I don't do those things because I care about you guys. And even if you disagree with me at the end of the day, you being here means a lot to me, and I want to do my best to showcase my opinion, because if I don't stand by my convictions and I tell you guys a narrative that I don't believe in from my 12 plus years of analysis, then I'm not really doing a service to you all. If I just sit here and say, yep, the times are good, let's put on our party hat and remain ignorant of what's going on in the macro scene, I'm not really doing my job as a macro analyst. Doesn't mean I'm always going to get it right, but it also doesn't mean I always get it wrong. I think that's a false statement to make, even if we got it wrong this time. So I'm going to continue to be here with you guys throughout every step of the way, and I hope you guys will continue to stay here on this channel as we go throughout the next couple weeks, months, into the close of the year, as we look forward towards 2024. My biggest goal here, as it has been in 2023, is to continue protecting and preserving capital. I'm not feeling really down to the dumps here that I missed this move, and I say that quite candidly because the number one goal here that you need to keep focused on when you're trading throughout your, trading or investing, whatever label you want to use, you're not going to likely be invested in something your entire life. Eventually, you want to realize returns, or you want to, spend that money to some degree, right? Maybe you have something that really is a generational play. But the key thing here is that even if you're investing or trading, you want to make sure that when you make money, you don't lose 80% of it, like in a traditional crypto bear market, right? You want to make sure you actually lock in profits. And you want to make sure that you're going to be able to basically keep plateaued, or as plateaued as possible, and move higher. Sure, you've got taxes, you've got some other things you need to consider, but at the end of the day, it's very important to make sure that you don't just sit by and remain passive in the market, because the market will take those gains from you. It will lean into your emotions. That's how I've been able to build phenomenal amounts of wealth here over the past decade. I mean, more than I could have ever dreamed of when I started investing. And I know that you guys can do it too. So, anyways, guys, I rambled out a good amount here. I hope you guys enjoyed this core part of the video, but I want to spend some time to talk about BitGet's new feature, copy trading, which is really interesting here because, as we just talked about here, trading is going to be a generally losing game for people, which is why I think it's best to consider exploring some options like copy trading, where you can lean into more professional traders in the space, not over leveraging yourself and taking too much risk in the market without having proper risk management strategy. So let's go ahead and dive into the review. Alrighty, everyone. So in today's sponsored review, I want to spend some time to talk about a cryptocurrency trading platform that offers a new and unique approach towards actively trading in crypto markets, where you not only don't have to stress about the day-to-day of trading in financial markets and constantly watching the charts, but along with that as well, can potentially not only mitigate a lot of potential losses that can come with trading, but also boost your profitability. Today, I want to spend some time to talk about BitGet's exclusive feature of copy trading. Now, copy trading itself has been around for some time. It's been around in traditional forex markets and equities trading platforms, but it's just starting to finally make its way into crypto, and it's become growingly popular over the past couple years. Simply put, as the name probably gives it away, copy trading allows you to trade alongside other traders within the exchange platform. So if there are professional traders out there who have a history of not only using proper risk management tools, but showcasing real profitability in their trades, you can copy alongside them and hopefully win with them as well, also mitigating losses when things don't go the right way. And this to me is a really exciting feature, because not only does BitGet have this feature on its platform, it's had it for some time. They have over 110,000 elite traders, over 500,000 followers, and have realized over $380 million in shared profits towards those who are copying the elite pro traders. This to me is really powerful stuff. And more specifically for me, what I really think is good here is that at the end of the day, statistically speaking, people are going to lose out trading in markets. Not to mention, if you don't take the time to understand proper risk management, such as using take profits or stop losses, and actually coming into trades with a game plan, you are much more likely to lose when it comes to trading on your own versus copy trading. I think it's a much better medium here for those who do want to capture the action of short-term moves and the potential inefficiencies or abilities to make profit in the short term rather than just simply waiting in the long term, but at the same time don't want to have to constantly watch the charts. So this is the value proposition that BitGet offers here. So essentially speaking, I want to go ahead and run through some of the user experience here to talk a little bit about how it all works. Essentially speaking, on the copy trading features here, there's a couple different markets. There's futures copy trading, which is more focused in derivatives using margin or leverage. I personally recommend, though, focusing in on the elite spot traders. As many of you know, spot markets are focused in on directly trading with capital that the trader has. This would be the case also for yourself if you were to copy trade with them, where you're directly trading on spot markets. You're ideally hoping to buy low and sell high, or essentially make sure that you're trading directly with the upward trend of the price. So essentially speaking, we'll go ahead, click on the elite spot trader area here. So now that we're here on the copy trading page, we can see that there's a whole range of different traders that we can follow. We can see those with the highest ROI, those are those with the highest percentage return from the inception of when they started. We also have other accounts here that have high yields, such as the highest all-time profits, and along with that as well, the highest copy trading profits in regards to the overall total profit or loss of the overall pool of those copy trading. So at the end of the day, all of them measure slightly varying different things, but they generally are aimed at trying to find the most profitable traders that we can copy alongside. The important thing to understand before we dive further is that there is an incentive here for these traders to win out and use proper risk management. Essentially speaking, they can earn up to 10% of the profits that you earn by copying them. And think of it as a sort of fee here in this case for providing the copy trading pool. And this can allow them to really make sizable capital if they can get a lot of AUM or people copying alongside them, generating sizable trade revenue in the long term. But generally speaking, there are some important nuances to understand here when picking an account to trade alongside. It's important to understand that some may be trading with smaller pools and therefore can take certain trades that just may not be scalable for larger traders. And outside of that as well, just because someone made a really sizable return or has the highest ROI doesn't mean that they're going to continue to maintain the highest ROI. What we need to do is find people that are going to continuously show up to the plate with proper risk management and a profitable trading strategy to hopefully win out in the long term, and at least at a minimum reduce our chances of potentially losing out in the market. So I want to go ahead and just showcase an example here. I like focusing on the highest copy traded profits because this shows here that the majority of people who have been copy trading alongside this certain copy trader have been able to actually generate returns throughout their time. We can see in the last 7 days that the overall ROI here has gone from 183% to 235%. Again, this is measuring from the beginning of time. So during that window of time, they didn't make a 183% or 200% move. It's essentially the overall return since the inception. We can see here, though, over the last month that this trader has been able to win out pretty good here. They've had some dips here where the ROI has dropped, where they've had some non-profitable trades, and sometimes where they break even. But generally speaking, it's been able to continue rising here with one really big win here between October 10th to October 11th. Now we can see a lot of really interesting data here as well around the specific trader. We can see the specific orders and the copy trades that they're making. As we can see here, they're obviously trading altcoins, which allows for those higher ROI returns on trades. And outside of that as well, you can see the followers and the exact amount of profit that each of those traders have made alongside the copy trader. But outside of this as well, on the left-hand side, we have a lot of information here around the assets under management in the pool and the current amount of followers who are following the copy trader. It's important to note that there are limits on copy trading accounts, and there's probably good reason for this as liquidity becomes a concern with certain trading strategies. Some trading strategies, trading small amounts of capital, could have a really high profitability rate. You basically have all the right things that tick off and you set up a trade and you likely win out if you're scalping the market. But outside of that as well, for larger traders, again, who are working with sizable amounts of capital, they might not be able to fit in those accounts or be able to make those strategies work. So at the end of the day here, it's going to vary here depending on who you are, how much capital you're allocating, and all types of different information. But let's go ahead and see what happens when we go about copying this account. So now that the page is loaded here, I want to spend some time to talk about the next few things we need to select or detail before we actually begin copy trading. And it's really good that BitGet offers these different types of settings so we can actually make sure we mitigate risk and follow things in a way that we would want to. So for example, the first thing we get to choose is the copy trading pairs that are available. So essentially for Raven, he's requested that he's able to trade a whole range of different cryptocurrencies here, all 257. If we want to just go ahead and trust his judgment, we can. But if there are some altcoins we don't trust or we don't want to have exposure to at any time for our USDT or our Tether, then we can take that off the list here and we won't copy those trades. That can, however, change the ROI over time. Along with that as well, the copy mode. So this is a really important detail here where essentially we can go alongside trading with him with a fixed amount of capital. So if we want to test out a strategy, maybe we want to start with just $100 copying alongside any of those trades, and we'll go in with a fixed amount. However, we can also use the multiplier here. So we could do, for example, 1x of whatever amount of capital Raven is using in a trade. We could use half of what he may be using, or 2 to 3 times as much if we really like his strategies and we want to deploy sizable capital. So this is a really cool thing that we can kind of basically measure this depending on how we want to go about doing the trade and what kind of risk we want to take. Speaking about risk management is also another critical thing here. Now, I would assume here that Raven as a trader, alongside many of the other copy traders, are going to use stop and take profit limits, right? So essentially, they're going to use some risk management. However, at the end of the day, traders are humans, and if someone goes off or deviates from their strategy and starts revenge trading or whatever it might be, it's important for us to have our own risk management here. That's why we can go about actually setting up a percentage stop loss ratio or a percentage take profit level, and we can have a maximum copy level here. These are important settings to consider, because if we have a trader who has this working strategy of a specific stop range, or for example has a certain methodology to how they go about trading, then you can actually hard bake those core features in there so you never step away from that strategy. And most importantly, I think most people will want to keep this in mind with the way that they would go about trading. How much can you really stomach losing on a position? And that's what's really great here, is that it's baked in that you can have that stop loss ratio of 10%, so that even though you may want to copy trade, at the end of the day, you can protect yourself and make sure that you're only going to lose a specific amount of capital on any given trade. So I think that's a really powerful tool here. And again, I applaud BitGet for giving you as a user that kind of feature. And along with that as well, you can ask to auto copy new trading pairs as they become available. And once you click the next button, you're pretty much on your way towards following that copy trader and deploying your capital. It's a really simple and intuitive process. And I think the important thing to understand here at the end of the day is, as I mentioned earlier, at the end of the day, the best thing about copy trading is that it's going to give you a better range of profitability and mitigate potential losses versus going out there and just going all in, hoping for the best and trading on your own in the market, not to mention the stress related to constantly watching charts in the market. And the big thing I really like here about BitGet as an exchange is it's got a lot of the other fundamental things that you need to get right beyond just having a really cool feature such as copy trading. They have a huge fund here, a protection fund for users of over $350 million, made up of over 6,500 BTC, 120 million USDT, and 40 million USDC. This protection fund is used in the case of potential exploits or account hacks in order to compensate users and actually make sure that things are whole and sound at the end of the day. This is really nice, but it's just the icing on the cake on top of the much more important proof of reserves that the exchange actually processes utilizing Merkle roots as a proof for the actual funds held. This to me is so important. So many exchanges out there, even after 2022 and all the exchanges that went under, still do not commit to an actual proof of reserves. And this to me is a really great step in the right direction in order to start building some more trust for exchanges like BitGet. At the end of the day, you can see here the balance between user assets and the overall assets on the platform, and you can see that there are varying reserve ratios here, all of which are well above 100%. This to me is a really good sign here for the exchange. Not to mention, by having larger exchange ratios, this likely means that they also have additional funds from market makers and participants for liquidity. And speaking about liquidity, BitGet has some of the best and deepest liquidity within the crypto market. As one of the top exchanges by trading volume, they also have deep liquidity when it comes to the order book. So if we take a look at some of the leading pairs here, even on the spot market, you get about $1 to $1.5 million of liquidity on each and every side of the trade here for Bitcoin. So this to me is a really good sign here. If you're looking to trade sizable volume, BitGet could be a solution for you in that regard. And even if you're a smaller trader here, it's important to have good liquidity so you don't deal with high degrees of slippage. But that's generally it here for BitGet as an exchange. There are a whole range of other products that it offers, such as its own custom wallet and much more, but I recommend you guys not only follow them over on Twitter, but most importantly, check out the link down below in the description where you can start to test out the copy trading feature, as well as some of the other features that BitGet may offer as an exchange. At the end of the day, I think it's a better approach than going out there and doing it on your own. And just like with day trading, start with small amounts of capital and see if you can find those winning traders that you can rely on. And make sure to constantly track from time to time your profitability to see if it's winning out for you in the long run. But that's it for today's video, guys. Hopefully you guys found this video valuable. If you did, consider dropping a like. It's one of the greatest ways you can support the channel. And I'll see you all in the next video. Take care, everyone.